Hey traders, this is my morning video, and basically some of the things I'm thinking about in the markets this morning. First of all, I'm pretty bullish on the markets in general. And I was like, oh my God, after the past few days, how in the heck could I be bullish about these markets? Basically, all I see in these markets is a technical reset. You can see that in the intraday action, in my opinion, that this is just no more than merely resetting the indices back to a more reasonable price valuations and for us to go forward here. There's plenty of liquidity in the markets. Typically, for a bear market to ensue, you really need to have serious liquidity issues and or credit issues and or credit issues. And yes, the headline news is all about the coronavirus, but I think this is just as much to do with the markets just needed a break to find better prices for investors to reload, and that's exactly what we got here. So basically, I got fib fans up here on these charts, and if you go out, see if I can zoom this. I don't have that auto zoom, do I? Can't ever find the right stuff, can I? Okay, from this extreme low, which we had way back here on December 2019. If you take this May and we've been in here, we are just basically testing. We just finally this morning breaking down away from this uptrend, and as of this morning so far, I am actually seeing buyers step up here in the markets pre-market here. The character of the sell-off has changed a little bit this morning since we've come down. Tagged this untested volume point of control that developed out back in last November. Okay, this is November value, and we came down to that and immediately started seeing some responsive buying. And this is a significant support resistance zone, and we're trying to defend this zone here in the pre-market session. So my opinion is that the markets are there are buyers trying to buy the dip here, in my opinion. And we might actually see a green day today. Markets trying to get the 3150, save this trend, and possibly even, you know how these bull markets, can really take off here. Well, I'm not saying we're actually going to get a massive move, but you never know. I mean, short squeezes have really been violent on this move up. And all told, the U.S. economy is pretty damn good. So I do not want to be loading the boat to the short side here because I really think that they're going to short squeeze us today in these markets. So just keep that in mind going forward here. And on your investing, I would not be pressing your shorts today. Okay. Let me get my NQs up here. Sorry I didn't have these things up and ready already. Qs, you can see this massive sell-off on the Qs. Pause this for a second. Okay, on our Qs, if you do your fib fans on that, similar situation. We came down just a little bit outside of our fib fans this morning. This is our primary trend. As long as we stay inside our fib fans here, the primary uptrend is still in place. So despite this massive sell-off of this blown off top situation, trend is still in place in my opinion. And they are, in my opinion, trying to support prices at these lower levels. And this is still, we are at the 2020 open on the NASDAQ. So keep this in mind going forward here that, P&Ls for the being in tech for 2020, they might you might be actually be able to see 2020 profits if we do get a responsive short squeeze in the markets here. So just keep that in mind going forward here, and some things that I'm looking at. Now on the flip side, the Russell, this is a beast of a different color in my opinion. This primary uptrend that started back in October, the whole trend is completely broken here. this is a more bearish take on the markets because of their large uh, exposure to the bonds, interest rates, and regional banks, and then also their uh, exposure to the oil industry. And so they both are taking it. This is really taking it on the chin because of their relative exposure to those sectors here. So, but we are catching a relative bid along with the other indices off the lows in the overnight session here. So, just keep that in mind going forward here. And if you look at your Dow now, YM, similar situation. Let's see, we broke that yesterday. They're trying to defend it. So basically now I have to, this was how I had it drawn yesterday. This is the situation we got right now. Okay. So we do have, it's still trying to defend a uptrend. Okay. So we are trying to hold price and basically taking out the froth in this market and trying to, this was the primary accelerated uptrend. This is the second stage uptrend low. So this is a responsive buy area on the markets. So keep that in mind on our Dow. So there's a lot of reasons to think that they are going to try to support prices at this level. So I just want to keep that in mind going forward here. Okay, I'm also seeing a change in character in the futures this morning. For the past several days, we've seen the bonds lead in volume this time of the morning. This is almost 5 o'clock in the morning for past several days, but now we're getting the S&P futures. So I am actually thinking we are finding some people shopping for the S&Ps at these extremely depressed levels. So keep that in mind going forward here, that we're actually not getting a lot of motion to the downside given the relative volume. So I do think there's a little bit of speculating coming in the overnight session in the ES futures. Just keep that in mind going forward. That is one thing that's alerting me right here. So and you know the percentage losses in the overnight session are just aren't too bad. So I would be very careful on your shorts here. We do have a support. We have a monthly VPOC, finding untested VPOC on our futures that we are catching that responsive buy from. If I can get this to load. Excuse me. This is a monthly VPOC developed back out in November. We are catching that bid, and like I said, this is the accelerated uptrend for the S&P futures that we are trying to defend at this point in time. I'm not saying, I'm not so sure we can do that or not, but U.S. equities are really in a very good way. Plenty of funding, plenty of liquidity, really good credit. Consumer has great credit. There's a lot of reasons to think that dip buyers will come in at some point here in a not so distant future. So just keep that in mind going forward into today's session. And then we got let me start here with the ZNs. Now, if you come down to your bond, another thing I want to point out here, we are not, so far this morning, we are putting lower lows in the indices, but we are not putting higher highs in the bonds at this point in time. So we do have a slight divergence happening on that front. And then if you also look at your VX futures, your VIX futures, I don't see it listed there. Similar situation. We did mark a higher high, I guess, in the overnight session, but as of right now, you know, we are not marking newer highs at this point in time in the VX. And typically, these are unsustainable levels for the VX futures. And give it a week or two out, these levels typically come right back down into the $17, $18 range historically. So just keep that in mind going forward here. It's really difficult to buy options right now. They're really expensive. If you want to buy a put protection or whenever the VIX futures get spiked like this, the premiums are so high, it's really hard to add additional um, protection or even buy the calls at these levels because of the heightened um, uh, implied volatilities. So keep that in mind. That's another thing that can trigger a short squeeze. Seeing that situation. Top volumes this morning. Shoot, can't see my. Okay. AMD. We are catching a bid again in AMD. It's amazing how every single day, um, despite no matter how bad the markets get, you always get the AMD, Apple, Microsoft, Tesla. These are the five stocks that tend to be or five, six stocks that always tend to be the hottest stocks out there. And that has not changed even during this sell off. So keep that in mind. And so far this morning, you're you're getting a little bit underwater on Facebook, underwater in Nvidia. Okay, it looks like pretty much all of these Gilead. I have Gilead calls, so it's got a nice little bit in Gilead so far this morning. Really taking it on the chin on the Tesla. They had the SpaceX come out last night, and it just really didn't go anywhere so far. Unfortunately, I have SpaceX calls, so it doesn't look like they're really wanting to push price higher on SpaceX. It looks like they're just taking a little bit of taking the major leaders down just a little bit further this morning across the board, in my opinion. But yeah, all your leaders there, these are the ones that if we do get a responsive buy, they'll be the ones to probably lead us to the upside, in my opinion. So keep that in mind going forward here. Let's see here. Yep. Okay. So the volumes aren't too bad, especially on AMD. I mean, look at that, 180,000 at 5 o'clock in the morning. That's not too bad to get too upset here, And so if you check out your AMD at these levels, uh, it's trying to hold that 2020 open on our um, advanced micro devices. I'm not saying it can actually do it, but it is trying to hold out a little bit more relative strength versus a lot of other things in the markets right here. So I don't want to get overly bullish because of the recent talk in the semiconductors, but it's something to keep in mind going forward here. Okay, and then we come down here. Volumes, AMD. This is the S&P 500 scan. Apple, Gilead. So basically, the only one that's up this morning is Gilead on the leaderboard, and of course, I do have that to the long side overnight. That makes me happy. And see here, pretty much, yeah. All the leaderboard here does look like it's down a little bit further this morning. So keep that in mind going forward here. But it's pretty simple. You just take the top 10, and those are the stocks that are going to likely be in play at the open this morning. And I've been watching Facebook. I think Facebook, they are preparing for a big. Facebook has limited exposure with this whole coronavirus. If anything, it's a net benefit, the whole coronavirus. And honestly, I think at some point here, real soon, Facebook is a buying opportunity. So keep that in mind going forward here. If you come out here on our overnight session on Facebook, we're coming right down to that VPOC volume point of control. This does look like a potential buy zone right below this trend line. This does look like a nice place to start accumulating, in my opinion. Facebook to the long side looks like a really nice opportunity in the morning session with a stop if it makes fresh new lows in today's session. Of course, you would stop out, but yeah, I really like Facebook down here as a contrarian trade to the recent trend in the markets. Okay, and if you go finally on my ETS, we've already gotten 420,000 on SPY. So yes, we have elevated volume on the S&P, the S&Ps and the SPY. So yes, there, and another thing, we're getting in the SPY, but we're not getting it in the Qs. So um, that suggests to me that the selling pressure is waning in the technology space. So you know, whenever the Qs are leading, and we're having a big down move, that's more concerning than actually seeing the S&Ps lead uh, at this point in time in this major sell-off. So I'm really thinking today is buy the dip opportunity. You may want to start poking your toes in and seeing, because the markets, in 1 week time frame, markets don't typically go straight down. You are going to get a bear market rally. And I don't even think we're in a bear market. I really think there's a very good chance that we may not have, we could very easily be back up near the highs we've seen this year so far. I mean, I think the trend is still, it might be in jeopardy, but it's not dead, in my opinion. So just keep that in mind going forward here. We just need to see rotation out of those bonds, and that's my biggest concern here. They're just parking so much money in those bonds, driving those yields down. That is quite concerning going forward here in these markets. Yesterday, Fed came out. They're matching past 2 weeks pretty much. They've been putting 50 billion in. They came out. They matched their 50 billion. Okay, I'm expecting a similar amount today, so that's going to be a potential catalyst to the upside. If they do that, it should be around 8:30, 8:45 for that situation. And as far as our yields go, these are extreme levels on our yield inversion. So keep that in mind. 1.58 versus 1.33. I think it has actually improved slightly versus yesterday. So just keep that in mind, that our inversion might be hit its top here on our yield inversion, and that would be bullish to markets too if we could start getting this thing getting back to normalized interest rates going forward here. So, but yeah, this collapse in these interest rates is very, very bad for the financials, and the financials led us to the downside yesterday. So keep that in mind going forward here. But I am going to be shopping for a dip buy today in the market. So call me stupid if you will. I don't care. So basically, like the video if you like it, and please leave comments below. I'm here to learn just like everybody else. But basically, some things that I'm looking for today. I'm looking for gold miners. I would be looking to short the gold miners if we were to start catching a responsive bid, and start looking to short volatility at these extremely high levels, maybe a few weeks out. That is never a absolute horrible thing. So barring another major headline, I think the odds favor the upside at these valuations. Thanks a lot, and I will see you in the trading rooms. Good luck, T3.